In the past, when we've had these levels of inequality, it's only ended two ways: in revolution or in an organized redistribution of wealth. As a species, as humanity, do we want to thrive? Do we want a positive future for all? Or do we want an exclusionary future where only the richest get the best technology and the rest are constantly trying to beat down the walls of the rich compounds?
Thank you, Brett, for joining Change I Am Possible, which is India's first future tech podcast. Sincerely appreciate and honored to have you on the show. So Mr. Brett King is a futurist, speaker, international best-selling author, and the host for the world's first and #1 ranked radio show on fintech called Breaking Banks. He has been named King of Disruptors by the Banking Exchange magazine and the Godfather of Fintech by Australian media. He is currently the founder and executive chairman of Moven, a mobile banking startup. So Brett, tell me, in India, due to COVID, millions of these micro, small and medium-sized enterprises are terribly impacted. No one was prepared to handle a complete stop of their businesses. Besides that, millions have been rendered jobless. Fear of COVID and uncertainty about tomorrow is adding on to the already stressful living in times of COVID. So trust in the banking industry is at an all-time low. Millions today have opted for moratorium, but it's heavily tilted in the favor of the banking industry. They've added the principal amount, the interest is piling on, the tenure is going to be added on. 4 months, the government forced a lockdown. Shouldn't there be a EMI waiver for the lockdown period? Shouldn't the banking industry come together and help rather than squeezing the living daylights of the common man? So how do you think this will impact, what I mean by this, how this emotion of a common man and Industry 4.0 will impact the future of the banking industry?
One of the key elements of change that COVID has thrust upon us is the critical reliance on digital infrastructure. And so for economies like India and frankly the United States, it emphasizes the disparity in digital inclusion. Where we have people that have access to online capabilities, have access to tools like Paytm and mobile banking and so forth. And obviously, we do hold out India as a bit of an example of some of the infrastructure changes required with the Aadhaar card. But digital inclusion is still a problem for markets like India, where financial inclusion in the future is clearly going to be linked to technology. We know this because when we look at financial inclusion globally, bank branches and those traditional mechanisms that banks used to use thinking that they would create financial inclusion just haven't worked.
Right.
The largest increases we've ever seen in financial inclusion have come since the creation of the mobile phone. So we know where this is going. But in respect to some of the elements you talk about, small businesses and banking in general, obviously banks cannot operate based on the same balance sheets, based on the same operational processes, based on the same technology that they have pre the digital era. And so right now, the fastest growing financial institutions in the world are all digitally based institutions. So the biggest privately owned company in the world, Ant Technology, previously known as Ant Financial, out of China, created in Hangzhou by Jack Ma. This now is a business that will IPO on the world stage at $200 billion. That puts them above the valuation of Deutsche Bank, as an example, and above the valuation of Citibank potentially when they launch. And so as a fintech, you cannot argue any longer that fintechs are sort of a radical fringe element of the economy. They are the future of financial services. The largest deposit product in the world is also owned by and technology. Bao sits on top of the Alipay network. The largest challenger bank in the world also comes out of China, interestingly enough, WeBank, with over 200 million customers. That's more than JP Morgan Chase has, the largest bank in the United States. It's getting very close to the numbers of customers that big banks in China like ICBC have. You have over 150 challenger banks in the world right now. You have 3 billion people already on mobile wallets. If you look at countries like Nigeria or India or Philippines or Kenya, more people have a bank account through a mobile wallet today than ever has been issued by banks with branches. And so clearly we do know that the future of banking sits on top of digital inclusion, sits on top of digital acquisition of customers, sits on top of digital engagement and tools that are embedded in your life through, these ubiquitous technologies like, the internet and the smartphone. In countries like India, we're now starting to see, rich feature phones and, simple smartphones coming onto the market for, very affordable rates, somewhere between, 1,000 and 5,000 rupees. So, this is changing accessibility, at a broader level. We still need to get internet access into outlying areas, but hopefully Starlink with Elon Musk and SpaceX might be a help there. So we're working on those problems. We do know the trajectory where it goes. I will tell you that if you're a bank and you still require a signature on a piece of paper to open an account, you are screwed. There is no hope of significant longevity or expansion of your brand based on that restriction. And so unless you are today offering most of your products through digital, then already I would say the writing is on the wall. Big brands like HSBC, Deutsche Bank, these big brands will be broken up and disappear as a result of the lack of responsiveness around digital infrastructure. I can predict for you now. In fact, it was 14 or 2015, and I made that prediction in the Economic Times of India. So I stand by that. That they'll likely be the first victims of this. But that's sort of my view of systemically where things are going. Obviously, the technology stack of a challenger bank versus a traditional incumbent bank are very, very different. The ability to be agile, to respond to customers' needs is very different. The design premise that we see challenger banks, they're much more engaging. I'm a customer of some of the biggest banks in the world, and I've not received any communication beyond the standard, here's your bank statement type emails through this period. But all the challenger banks that I work with, they're all engaging customers on a daily basis. So it's a very, very different mindset, design premise, or design a pattern that we're seeing with these challenges. And despite everything, the tough times that we're all seeing economically, I do think the challenger banks will come out of this stronger and obviously with real growth in mind.
Very good. So you talked about digital inclusion. You also mentioned that financial inclusion is going to be linked to technology. But if you go to see, we have not been very good with change. When we are reluctant towards change, we all this while, obviously we knew that all of these technologies has been on a creeping mechanism, right from your artificial intelligence, machine learning, IoT, blockchain. They are enabling each and every industries. But we've been we talk about it, but leveraging it and adopting it has been pretty much slow, right? So, you mentioned financial inclusion linked to technology. Can you dwell on that a little bit more? Because if you see today, the world is extremely, there's inequality is in ways beyond. I mean, we can think, because it's almost like a 1% of the global population holds 90% of the entire global wealth. So tell me,
I understand that. In respect to the points you raised, a farmer in India with a feature phone today, has more access to more information than Bill Clinton did when he started his presidency. So that's a big change. Sorry, just one moment.
Yeah.
So that's sort of mind blowing to think about, the fact that that basic infrastructure has come along so far in the last 25 years, but historically, it really doesn't matter as to how fast digital adoption occurs, because when we look at, for example, the Reserve Bank of India and the policy in the early days of the internet pushing for financial inclusion, which was to have 1 in 4 bank branches that banks opened in India were forced to open in rural areas, as an example. Or in the United States, we have one of the highest branch density countries in the world in terms of number of branches per citizens, which is 3 branches per 100,000 people, I think it is. But despite all of that, the United States has never even got close to financial inclusion, 100% financial inclusion. India recognized that the biggest problem for financial inclusion in India was not access to a bank branch. That, you talk about the 99% of people that don't have the wealth. The biggest problem was, even if I gave you a branch in the remote parts of India, and you walked in there as someone who's never had a bank account, you didn't qualify to get a bank account because you didn't have an identification. Right. And the same in the United States. The people that don't have bank accounts, about 25% of households in the United States, they don't have a driver's license or a passport. So identity is way more critical for financial inclusion than branches are, for example, or even technology. Reforming identity has been critical. So that's why we've been so interested in what's happened in the Indian market. With that. Kenya is another great example, 98% inclusion right now in respect to the financial side, but that's through mobile money, through M-Pesa, and that's happened over the space of, again, about a decade, from 2008 when M-Pesa was introduced, and you have 98% of the Kenyan population can do a mobile money transfer phone to phone, even on a simple, Nokia 8110 feature phone, money to money transfers around the world. The US doesn't even have that. In the US, you've got ACH. It takes 5 days to send money electronically. Kenya has a more modern, banking or money to money payment system than the US does today. And so that's, I think, indicative of what is possible with this technology. If we approach it in the right way, greenfield, this is the way it really is gone. If we want to get people out of financial distress, creating economic activity is key. Now, while we've had some booms around things like e-commerce, and if you look today at the largest companies in the world in terms of growth, at least on the stock market, are all technology companies underpinning this new growth. And so, whether it's e-commerce or in the African continent, in India and in China, the dominant form of new commerce will be mobile commerce based. And so we haven't even seen yet, or we have super apps and things like that we talk about now, but we're at the very early stages of the explosion of mobile commerce. And so, like, you look at Amazon today, it's $1 trillion company, with big growth coming through the coronavirus period. But the key element here is that what we'll see coming next out of countries like India, based on mobile platforms and the growth of mobile inclusion is massive booms in mobile tech, in robotic tech, in AI, and all of this that is part of the foundational elements of sort of this digital layer that's coming for the planet. Mesh networking technology is coming where your devices will be able to talk to other devices even if they can't reach an access point or a cell tower, as an example. There's a lot of, potential. There's autonomy in, autonomous devices, that will act as smart nodes on networks. There's so many potential things that's going to sort of blow this wide open. So the potential for this growth in digital access and this growth of or enabling the creation of new commerce and new ideas on top of this technology layer, we're only just beginning to see the start of that. And countries like India, which have been previously called by the West emerging economies. China and India are obviously not emerging economies anymore. They have emerged, and they will surpass the United States over the next, few decades in terms of the biggest economies in the world. But we're building new infrastructure. So when you look at, one simple example is just energy, right? When we look at the energy that's going to power this revolution, both China and India are slowed down in terms of coal production. They're investing in solar. They're investing in batteries and storage technology to store energy, because we know that solar is already the cheapest form of energy on the planet, and as we enable economies and we want to create new technologies, we can do it smarter, cheaper, and better than fossil fuel. And we need to do it anyway because we need to reduce pollution, and we need to provide a better. We need to start mitigating the risks of climate change. All of those things that are sort of bundled into this. But you just take if you take banking and payments, if you take energy. You take these systems. India can do greenfield. It can build this greenfield for this massive population that will have access to these services for the first time through a mobile phone, and in the future through technologies like voice-based AI and smart glasses and things like that. But whereas the US and the UK and Europe, they've got to get off the old systems. They've got to migrate from one set of technologies to another, and there's a lot of political resistance for that because you've got for example in the United States, coal companies and oil companies who have very powerful lobby groups that try and slow down political change around low cost energy systems and things like that, just as an example. The same with banking. We have a law in the United States called the Community Reinvestment Act. It was put in place in 1977, and it dictated how financial inclusion should work in the United States. And in 1977, the prevailing wisdom was you needed bank branches for financial inclusion. And so basically, the CRA says if you're in a town and you're the last bank branch in that town, you are not allowed to close that bank branch, because how else can people get access to banking? And so, as a result, in the United States, we're overbranched. We should have, many more bank branches closing, but banks are going out of business now because they can't close bank branches because those bank branches are, economically no longer viable. But the law says they can't close them, and so, this is an example of a law that's been put in place. The law is inappropriate for today's age and today's technology, but trying to get that to change requires an act of Congress where you have to get agreement between the Republicans and the Democrats, and they're never going to agree on something like that to change that law. And so that's why China is probably 10 years ahead of the United States today when it comes to banking digitally, because their regulations have changed and adapted. In the US, they haven't. So the US doesn't even have fintech licensing. At least India has the payments bank initiative, but the US doesn't even have that. When the OCC, the Office of the Comptroller of the Currency, which was one of the primary regulators in the United States, tried to introduce a fintech license, the New York Federal Reserve sued them. One regulator sued another regulator to stop them from putting a fintech license in place. This is insane. But this is what's going on in the US because of the incumbents wanting to sort of keep their business. But you know what? In 250 years, when we look at the advances technologies have made, from the steam engine through to electricity, through to the combustion engine, through to the telegraph and the telephone, television, all of these technologies that we've seen in 250 years, there's one singular lesson that we learn from that. Is no incumbent ever survives without adapting. And so, you know what? The fact that the banks are trying to hold off on these changes in the United States, the fact that fossil fuel companies are trying to resist the shift to, solar energy in the United States as an example, it's just a matter of time. They can't win. No one ever wins by fighting against technology. Technology always wins. It's a relentless part of our evolution as a species.
Completely. So I am completely with you when you say that technology is going to drive a future, because that's the reason I'm doing this podcast. That's the reason I'm trying to raise awareness.
Sponsored by Starbucks.
Raise awareness about how technology is going to play a huge role in the future evolution of mankind. Coming back to the banking industry, right? I mean, you spoke about fossil fuel, right? I mean, the banking industry has been funding the big companies responsible for the fossil fuel industry. Mm-hmm. They've pumped in close to $2.7 trillion just last year. Now, so that's just one of this thing. How do we create... That's
a systemic issue, for sure.
How do we create a inclusive model where we take care of each and every human being in this planet?
Absolutely. Because, I'm absolutely with you.
Some of the biggest billionaires in the world, I think, even if they loosen up their purses a little bit, the world will be a much better place. Today in India, the lower middle class and the migrants laborers, they are devastated. They don't have the next meal on their table. And so how do we build a better world? We talk about financial inclusivity. We talk about this technology, which is going to change the world, in the coming future. How do we change it right now? Because I think we are in a terrible time right now. What can be done to build an inclusive world? I know this question is a little too vague.
I completely get it. In fact, I'm writing a new book on all of this right now, and it's called The Rise of Techno-Socialism. And it addresses this problem. One of the most serious problems we have right now in the world is we have some of the worst inequality in history. Certainly in the United States, this is the worst period of inequality that we've had, for many, for the US's modern history. Let's put it that way. And you take Jeff Bezos's wealth right now, and it would take him 65 million years to spend his fortune if he spent $1 million a day. Right, based on the fact that his wealth would continue to accumulate. Right, so it's insane, right, to have that sort of wealth capture. So resource utilization, making resource utilization more effective for everybody is obviously a critical goal for the human species. I'm a big believer in this sort of Aristotelian view of humanity, which is the purpose of humanity is to thrive as a whole.
Right.
And so for us to do that, we have to stop thinking in terms of economic status. We have to stop thinking in terms of race. We are a species, and if we work together, we have abundant resources on the planet right now to be able to make everyone comfortable, everyone to have a roof over their head, everyone to have food in their belly, everyone to have their basic needs met. We can make education free and ubiquitous. We can make healthcare free and ubiquitous. This is within our technical and resource capability right now. Why haven't we done that? Primarily because of capitalism. And so when you look at COVID-19, what COVID-19 has taught us is that capitalism abjectly failed. It failed to protect us from COVID-19. It failed to respond to COVID-19 adequately. We are still suffering the effects of that. The economic effects of COVID-19 will be as worse, if not worse, on an extended period than the disease itself. So we must reform capitalism at the very heart of this. So when you get back to organizing principles for humanity, then we can look historically at people like Will Durant, The Lessons from History. Will Durant and his wife wrote this book in 1967, if I'm correct, about the history of the world and how people, what organizing principles there were in the world. And if you look at that, and it's true today, as it was then. And more recently, you've got sci-fi authors like David Brin have written on this, which is very interesting. But society has been organized in two basic organizing principles throughout recorded history. And that is the feudal system, sort of a classic pyramid shape, right? Where the 99% sit down here and they feed all wealth up to the 1% at the top of the pyramid. And so this was the feudal system in the Middle Ages in Europe. It was the church was involved in this, obviously, in the Middle Ages. But before that, it was the royalty, the kings, and the wealthy elite that controlled that flow of resources. When the Black Plague hit, one of the most disruptive effects of the Black Plague was to crumble that pyramid because the wealthy living in cities were more adversely affected than the farmers and the people living in rural villages and things like that by the bubonic plague. And so it was a great equalizer in that respect. And inequality made huge strides after the Black Plague. When we look at what happened in respect to COVID-19, despite the efforts in countries, the moratorium on mortgages and loans that you've got in India, the support payments, stimulus payments that have been made in the UK. The US has done an appalling job on this. One payment of $1,200, and for many people, if you had an immigrant in your family, you didn't qualify. As an example, very racist, exclusionary policies there. But that one payment's not enough for anyone. So, you've got massive financial distress here. Here I am in New York. 25% of landlords haven't received payments for rental payments since March. 30% of mortgage holders in the United States haven't paid their mortgages. People are getting bills. One guy was in intensive care for many weeks as a result of COVID. He got $1 million bill from his hospital for the COVID treatment. Whereas in the rest of the developed world, that treatment would be free. And so the US is fundamentally a broken system built around this pyramid concept. But it didn't used to be. In the 1960s, the US was a diamond-shaped economy, right? After the Second World War, there was the New Deal, the GI Act, and all of this effort put into building infrastructure in the United States and creating jobs after the Second World War. What it created was the American dream, the biggest economy in the world. With this electronics boom, and everybody wanted tech, from the US in the 1960s and 1970s, like TV sets and fax machines and Boeing jets and things like this. And so you had this very strong, robust middle class following classic bell curve, a diamond-shaped economy. And what we know historically is those diamond-shaped economies are the most efficient economies. They're the most profitable economies throughout history, and they're the most inclusive economies, right? And because you create broad economic activity, you get inclusiveness because the middle class is growing and they're consuming more. And so the effects on the economy are much broader. And that's what's happening in China right now. China is going from that pyramid shape during the early communist stages, to a diamond-shaped economy with a strong, robust middle class. That's why China is going to surpass the United States as the biggest economy in the world, because the US is going from diamond back to pyramid, and China's going the opposite way. And so if you want to look at what is the best outcome for your economy in India, for my economy here in the United States, what is the best outcome for humanity as a whole globally, we need to create that diamond-shaped economic system. We need to have basic social support structures in place. COVID-19 is just the first crisis of many that we're going to deal with over the next 30 years. Technology-based unemployment as a result of artificial intelligence, the impact of climate change and the effect on the world, more pandemics coming as a result of glacial melt and, primordial viruses being released into the world, from a result of climate shift. We're going to see, there's a great quote out of one of my favorite shows, which is called Newsroom. It was written by Aaron Sorkin, starring Jeff Daniels as the sort of anchor of this TV show. But he had this climate change expert on, and this is fact checked. But half of the world's population lives within 120 miles of the coast. That's the first stat. That's the first piece of information you know. The second piece of information that's really critical is humans can't breathe underwater. Right. And so as climate change impacts us, there's 300 million people in the next 20 years that are going to be displaced by climate change. Now, if you think Syria was a problem, if you think, the displacement of 1 million refugees from Syria is a problem, multiply that now by 300 times. And what do? You shut your borders to immigrants? Well, you can't. There's 300 million people that they're going to die without food or access to basic shelter. You can't, as a human, just say, we'll shut the borders. That's not our problem, particularly if like you're the United States, because, as the United States, you caused that problem. You emitted carbon into the atmosphere. You warmed the planet. You allowed that to happen. You are responsible for this impact. You have to take, and if you don't take responsibility for that, hopefully the world courts, these global mechanisms like the UN and others will hold you responsible for that. And the companies that did that, the companies that made these profits on that, they're going to be held accountable. Now, if they don't do it voluntarily, I think they're going to be required by legislation to do that. But, let's face it, some of these fossil fuel companies will go out of business over the next 30 years as a result of changes in energy systems anyway. So as a planet, we just have to get organized around this. So, when AI displaces unemployment in the United States, between 40 to 50% of the people that are currently employed, that still have a job after coronavirus, will lose their job as a result of autonomy. New jobs may be created, artificial intelligence specialists, robotic psychologists, robotic repair people, things like that. But it's not going to be enough to, close the gap.
Right.
And so as a result, you're going to have much higher rates of unemployment. So in the United States today, where, the reported unemployment rate is like 11, 12%, it's more probably like 20% real numbers in the United States. This is par for the course. If you have a quarter of your population unemployed, unable to earn an income, you can't say to them, you're just not working hard enough. The jobs just won't be there. And so you must have a basic social safety net in place, universal basic income, access to housing, access to free education, access to free internet access, and things like this must be a basic right of humans in this sort of changing world. So there are some big challenges. How do we navigate through this? Ultimately, there's sort of 4 quadrants that we talk about with this. So if you look at it on a graph or on a sort of a magic quadrant style, you've got exclusionary policies and you've got inclusionary policies, right? And then you've got dystopian futures and utopian futures. So if you want a utopian future that's inclusive for everybody, guess what? You have to plan for that. It won't happen by chance. Capitalism won't get us there. The current form of capitalism creates exclusion. It creates division. It's designed to move money from the bottom of the pyramid to the top of the pyramid. It is a failure for our species. Now that doesn't mean we get rid of capitalism. Capitalism works, but what is missing in capitalism is the broader social intent. There's no social contract that capitalism has with society. And so capitalism needs to have a social contract, and that is do no harm to the environment, do no harm to the population, create opportunities for inclusion, create opportunities to clean up the planet, undo the damage we have. If you think about it, that's what's been missing the last 50 years, because, why weren't the fossil fuel companies held to account for polluting the world? I mean, in the 1970s, the environmentalist movement really started in the 1970s. Why? Largely because of the moonrise, the Earthrise photo, taken by the Apollo astronauts back in 1968, Apollo 10, before Apollo 11. When they circled the Earth and they took that first photo of the Earth from outer space, we realized we didn't have borders. We were one species. We didn't have races. That was, and the planet was beautiful from space. That was the start of the environmental movement in the 1970s. And so that sort of push that we've had, that waking up in consciousness that we've had, that was great, but it didn't translate into market dynamics. Fossil fuel companies were polluting in the 1970s. There were protests, but the market was happy to say, they're still making profits. It's okay. We'll let them go. Right? Instead of saying you can't make profits off damaging the planet, which is what we should have done in the 1970s. So when we look at what happens in the future, this is why I call it techno-socialism, that the increase in technology allows us to solve this problem, but it also means we're more connected than ever before. And this creates this global movement for social responsibility, social connectedness, bigger goals for humanity as a species than making quarterly profits for shareholders, which really doesn't help the vast majority of humans. And if you look just even since 2000, protests globally have increased over 800%, around the world on things like climate change, on votes for populist presidents and then votes against populist presidents. Black Lives Matter, the systemic racism in the United States right now, those sort of things. All those protests. We're talking about almost 1,000% increase in protest volume and protest activity around the world in just 2 decades. So why is that happening? People are saying the system is broken. It doesn't work. It doesn't work for the vast majority of humans. But there are a powerful cabal or cadre of very rich people that get to have much more of a say in the setting of policy and in the way markets and wealth is distributed. So we need going back to Will Durant says when you have the level of inequality that we have in the world today, in countries like the UK, the United States, Australia, where I'm originally from, in the past, when we've had these levels of inequality, it's only ended 2 ways: in revolution,
right,
or in an organized redistribution of wealth. And so that's why I believe, we're coming to this period of techno-socialism, a sort of a socialism powered by the fact that socialism doesn't cost you what it used to cost in the past to provide ubiquitous services for people. I can now 3D print a home for $4,000 US in 24 hours. That we've never had the ability to do that before with 3D printing. I'll be able to provide you healthcare in real time using artificial intelligence that can predict your health over a period of time based on certain metrics. So I now get into preventative maintenance of your health instead of just treating symptoms when you get sick. Education, we've seen that changed dramatically during coronavirus. But we don't need schools. We don't need physical classrooms that were built in the end of the 19th century, to create these training grounds for obedient factory drones, because that's essentially what classrooms were. They were built to, you had your manager, teacher at the front. You weren't allowed to ask questions. You had to put your hand up, and you were taught by rote, and so this is an inefficient education mechanism, in today's world. That's why Elon Musk created his own school, Ad Astra, to teach his kids, because he says, the schools today aren't preparing our children for the world of the future, which I absolutely agree. So education is going to become ubiquitous, free, based on these technologies online. Transportation is going to become free, low energy cost. We're going to have autonomous electric vehicles. You won't need to own your own car. So there are positive things coming in the world that enable us to make the world more inclusive and more positive for many more people than we have today, less exclusionary, and it will be forced through this political change where we see that capitalism really has failed us.
Brett, thank you. I was just listening to each and every word of yours. It was so profound. And you painted the entire picture, what is wrong with the capitalist world, the revolution which is waiting to happen, which I believe is inevitable.
The revolution will be televised.
Right. And you pointed out towards Industry 4.0 and how it's going to cause displacement with automation. I keep on every podcast, every interview I do, I keep on raising the point of how Industry 4.0 is coming and how it's going to displace us. Obviously, it's going to create jobs, but it's going to take more jobs. And it's almost like a double whammy, because if you see, COVID-19 has already displaced around close to 40 or 50 million people in America. And India, close to 120 million people are jobless. And then automation is going to do that, right? And so, when I'm having this conversation, I am so riled up about the government, their lack of enthusiasm or care for the common man. They say that there's a stimulus package of 20 lakhs crore, which has gone just to the banks and the big corporates.
It's worse in the US, man. It's worse in the US, right? I cannot even begin to tell you how unequal the distribution has been. 90% of it's gone into corporations, and the top 10% has gone into friends of Trump. And their businesses. It's insane. People who basically financed Trump during the last election got the first allocation of profits. We're my startup. We're a customer of Bank of America, and I don't mind putting this out on the air because they failed us. We're a multi-million-dollar company. We have revenues close to $10 million a year. We're not a small business anymore. You'd think we'd be a client that Bank of America would want to keep happy. So we applied for the PPP loan. This was the stimulus package for small businesses in the United States to keep people working and employed. Bank of America, no, nothing from them for weeks. And they're saying, no, you missed out on the first allocation, the second allocation, we'll see what we can do. Meanwhile, they're funding all of their best customers. Their most profitable bank customers are getting these PPP low interest loans, right? These companies don't need it. They don't need funding, right? But because they're the best customers of the bank, they're the first companies to get the funding. So we go to a smaller bank, within 24 hours, we have approval for a PPP loan, which we couldn't get for 6 weeks through Bank of America because we weren't considered their best customers. That is criminal. I'm sorry. It's unethical and criminal. But that's been happening all over the world through this. So how do you create more equitable stimulus? Well, the best way to do it is not necessarily just cash. Obviously, I do think UBI is going to become necessary. I think it's going to become a staple globally.
Right.
There's a good sci-fi show, I don't know whether you've seen it, called Expanse, which is built off a series of books, Amazon. And in that, most of the world, about 40% of the world, lives off what they call basic, right, which is universal basic income. And I do think that that's sort of a fairly accurate prediction of things. But then housing, low cost, housing is within our grasp now. We'll be able to, homelessness should not exist. If you look at the wealth tied up in the US economy today, the trillions of dollars a year of GDP, if you say you can't provide basic housing for your citizens when you've got that amount of wealth, that's crazy. Ultimately, it comes down to this. As a species, as humanity, do we want to thrive? Do we want a positive future for all? Or do we want an exclusionary future where only the richest get the best technology and the rest are, constantly trying to, beat down the walls of the rich compounds to get to their wealth? That can't be our future. And hopefully one thing AI might do is make government more efficient, especially as we look at resource allocation. Although, the problem with that concept is that, the wealthy tech entrepreneurs will probably define how those AIs work. So it depends on whether they're more socially, geared or not. But yeah.
So I think we're living in crazy times, but I strongly believe that all traditional businesses, all the brick and mortar businesses with a legacy functioning, I believe they are on their way down because technology is really going. You talked about education. You said how education is available free at this point in time. You're from the banking industry. You have a startup, Moven, which is, I believe, is going to completely disrupt the traditional banking industry. There are these tech companies, Facebook, Google, Samsung, Apple, Amazon, they are all getting into fintech. How do you view the traditional banking industry being impacted by these tech companies or fintech or the future of banking?
So, if you look at it basically, traditionally how banks worked is if you wanted access to a bank account, let's say 30 years ago, in the 1980s, 1990s, your only vehicle was to go to a physical bank, sign a piece of paper, and then you would get a bank account, which was a passbook or a checkbook or a plastic card. Right? If you wanted to get money out, you could only get that through a bank. You could either walk into a bank branch or you had an ATM machine. If you had a problem, you could only speak to a human in a bank or you could later call a call center. So every aspect of banking was limited to bank-owned network, bank-owned channels. The only way you could get access to banking was through those authorized, regulated channels. Not today. Today, you probably got more people have a Paytm account in India than SBI accounts, State Bank of India, as an example. You think about where this is going to go over the next 10 or 20 years. You're going to have artificial intelligence built into your smartphone, into your smart speaker at home. I'll be able to say, hey Amazon, what's my bank balance? Can I afford to go out for dinner on the weekend? And my smart speaker will know the answer to that question. And so all of the rails, all of the channels that define modern banking and the modern banking experience will be owned by technology companies, not by banks. Banks will be underneath that. Banks aren't going to start building, Amazon Alexa and Google Home devices so they can start competing with technology companies. That's ridiculous, right? So instead, they become relegated to sort of this back-end value store, the utility of banking that we have today. So what utility do you get from a bank if you're a basic retail customer? 3 things. The ability to safely store money, the ability to safely spend money or send money to your friends, money movement, and third, access to credit. when you don't have enough money. They're the only three core pieces of utility that banks provide. If you take a car loan, a car loan is basically the same as a mortgage, as a credit card. It's just a credit facility. It's got it's got an amount that you take on credit. It's got a maturity date, an interest rate, a schedule of payments. The basic structure of a credit facility is the same, regardless what wrapper you put on it. So if you think about how I'll get access to credit in the future, I won't get a credit card. That's sort of ridiculous, because if I'm in a grocery store and I don't have enough money to get my groceries today, applying for a credit card and waiting till they send you a piece of plastic is not the best option. If there's a tech company that knows my behavior, knows how much I spend on groceries, and when I walk into the grocery store, they can use AI to predict that I don't have enough cash and offer me credit to solve that problem. And on that basis, you would never use a credit card ever again, because you use the technology capability to access credit. So credit card departments are gone. The credit card product is gone. We need credit, but we don't need credit cards. We don't need plastic. We don't need an application form. And so technology companies will sort of define this experience layer of how we access the utility of banking. Savings is becoming behavioral, not product-based. So in the past, where savings used to be, your success of a bank was based on your interest rate you'd offered on a savings account. The biggest, most successful savings experiences in the world today aren't based on APR. Yui Bao in China, on top of Alipay, $300 billion of assets under management at its peak. One in every three Chinese citizens has a Yui Bao account, right? Why was that successful? Because it was linked to the Alipay wallet behaviorally and made it very, very simple for people to save. It was about behavior. It wasn't about interest rate. And so, everywhere you look right now, this technology layer is changing the way bank utility is surfaced, but it's owned by these technology companies. So, what you have, the future of the banking system, is really three sets of players all sort of converged into this one ecosystem. You have some traditional banks that will survive because they put a digital accessibility around their technology, make their stack available through APIs and so forth. You have fintechs who've come in and developed specialized capabilities around the technology to leverage tech in unique ways, whether that is acquiring customers or whether that is serving customers in different ways. And then lastly, it's the tech players, and the tech players own essentially most of the distribution layer. So these three players come together into sort of this future ecosystem of banking, where banking is, as I said in Bank 4.0, banking everywhere but never at a bank. Like, banking is just embedded in your world around you when and where you need it.
Right. So can you talk about a little bit about your new book, Banking for 4.0, and what do you think about fiat currency and its relevancy? With UBI, if it comes into play with the automation, blockchain coming in, do you think fiat currency will be relevant in a world where everything is automated, where jobs are taken over by machines? And what do you think will be the role of a fiat currency?
Sure. Well, if you look historically at money and the role of money, why did we develop fiat currency? Why is there not a global currency? Well, if you think about how money developed in the past, originally we started off with barter systems. You'd exchange a cow for 5 chickens or something like that. I don't know what the exchange rate between cows and chickens were in the 8th century. And then we had coins. The Chinese started sort of the development of, even Sumerians had coins, I guess, way back there. But organized banking systems and things like that started to come in place around value stores. And so you would make your currency. Your fiat currency was limited by your geographical boundaries, right? And so, that was to ensure that everybody in the geographical boundary in your country or your city or your town could have a common method of value exchange so that commerce could occur. That's the historical development of money, right? And, in times when the economic systems have broken down, like during the Great Depression, people find alternative ways of value exchange. They start trading services in California during the Great Depression. In Pismo Beach, people had clamshells that they used as sort of a local loyalty program that enabled people in the local community to trade with each other and provide a clamshell as an alternative to the US dollar. And that's why sometimes we call money clams, right, in the US. And so there are examples of alternative value systems that have come into play that are more effective, than paper currency. You look in Zimbabwe during the height of inflation, people use US dollars because it was more stable than the local currency. And so when you look at this in respect to sort of the global scene, when we look at global commerce and global connectedness, fiat currencies don't make a lot of sense. Where you have to cash in, cash out, you have to have exchange rates. If you were redesigning money today from scratch, let's take first principles design. I'm a big fan of Elon Musk and Steve Jobs with this sort of first principles design patterns, because that produces magnitudes more innovation generally. So if you were taking a first principle design approach to money, would you make money today geographically constrained? No. Would you have a physical currency? No. Most of the money transactions in the world, vastly, 98% of them are digital anyway today. So you would design a currency optimized for the digital landscape for global commerce. What would that look like? It wouldn't necessarily look like Bitcoin, because Bitcoin's flaw in its design was its limited mining run, the 21.5 million Bitcoins or whatever. The fact that people saw there was limited supply, and that limited supply created hoarding. That hoarding created a digital asset, not a digital currency that people would use to buy things up. No one wants to spend their Bitcoin if it might be worth $1 million in a few years as a result of appreciation. So that was the flaw in Bitcoin's design. But if you take that out of it, then everything else was there. So, yes, from a cryptocurrency perspective, yes, the world's leading currency by the middle of this century is likely to be a digital currency. Will it be a digital fiat currency? CBDC, central bank digital currency, or will it be an anonymous blockchain crypto-based currency or token? I don't know the answer to that. Ethereum and other newer cryptocurrencies may do better than Bitcoin in the long term. Bitcoin as an investment is interesting right now as an asset class, but Bitcoin illustrates the key problem that most people don't realize with money is that money, whether it's digital or whether it is a fiat currency, money has no inherent value. The only value it has is what we attach to it. So a great quote out of a couple of movies, Mr. Robot, or TV series, or The Ozarks, or you think money is real? You think the US dollar is real? It's a figment of our imagination. We attach value to it as a society. So as soon as something can replace in the psyche of consumers that it is a safer value exchange mechanism than the US dollar, then it will become the currency of choice, whether that's a fiat currency or cryptocurrency built by a tech company. And that will happen sometime in the next couple of decades as the US dollar becomes increasingly less valuable.
Okay. So would you like to talk about your company Moven and your new book, Bank 4.0?
So Bank 4.0 was my latest book. It's a couple of years old now. It's still knock on wood, it's still in the top 10 banking books in the United States after 2 years. So it's done very well. I'm very pleased with it. It won the best foreign language book of the year in Russia last year. So it's done very well. And it's enabled certainly me to have an ongoing conversation around the world in terms of what's happening with banking. In the book, I basically come up with a single sort of chart that explains why banking is on this trajectory for change, and it's basically two axes. One is for going from physical distribution systems to digital distribution systems for the internet. This has happened, the world over with every industry, but it's happening in retail with books, with online services and so forth, Uber and everything. So you go from physical distribution to digital distribution. The other angle is you go from very high friction customer involvement and engagement, where you need a branch, you need to bring all this paperwork to the branch, you need to sign a piece of paper. Maybe if you're lucky, you'll get approved for a loan. You go from this very high friction, high touch environment to low friction, low latency environment through technology. So you follow that on a trajectory, and you go from bank 1.0, sort of the physical world, 2.0, the internet world, 3.0, the mobile world, and 4.0, where I call it ubiquitous embedded banking, where banking is just embedded in the world around you. That's the trajectory we're on, and no bank is sort of going to be able to avoid that. So that's what I talk about in Bank 4.0. Moven obviously is my instantiation of that strategy. Moven was the very first mobile bank account in the world. We were the first bank that offered a debit card in a mobile app. We were the first to do that. We were the first to change the homepage of the mobile banking app from a list of accounts you had, your checking or current account, your savings account, your credit card. We changed that to be a artifact we called the spending meter. The spending meter showed you how much money you were spending this month and how that compared with your average spend. So if you're spending more than you typically spend, the app would turn red. The whole screen would turn red. If you were below your typical spending, it would turn green. So it gave you very simple feedback about your financial health. We then extended on those tools. We had a real-time receipt. You swipe your card or you tap your phone at a point of sale, and you would get a receipt on your phone before the paper on the point of sale would start printing off. And that would tell you, this is the merchant, this is how much you've spent. If you're in Starbucks, this is dining out. If you're an Uber or a taxi, this is transportation. And it would instantly categorize that, and it would show you how much you spent on transport this month versus other months. And so, at the 10th of the month, you say, boy, I've already spent, 2,500 rupees on taxis. That's crazy, And so immediately, you start to sort of rethink your spending habits. So that behavioral psychology that we built into Moven was new. No one had ever done that before. We created impulse savings, where we would message you throughout the day, both in notifications and then in app, which would say, for example, hey, you're $200 below your typical spending for the month. That's excellent, but why don't you save that money? Right, so that simple measure. When we launched our savings account for Moven back in 2016, we had no ability to offer an interest rate because we didn't have our banking license at the time, right? And so we had to just offer the ability to stash your money. We called it a stash, but we couldn't have any interest rate on that. And we had no money for marketing this savings product. So all we did is use behavior, and over 50% of our customer base saved money within the first 10 days of receiving those notifications. Why? Not because of APR, not because of marketing, but because we had worked out the behavioral element of savings. In fact, we got so precise, we can tell you the best day of the week and the best time of the day to message someone to get them to save money in countries like the United States and Canada. At 6 a.m. to 9 a.m. on Thursday morning. Why? When you look at the psychology of saving money, if I message you on Friday afternoon, it's too late. You've already committed spend for the weekend, right? So Thursday morning is early enough that people can commit to savings. So all of these things that that we did, with Moven, I'm very proud of, because all of these challenger banks around the world, the challenger banks that are starting in India right now, banks like Monzo and Starling and N26, all copied elements of those features from Moven. We really set the design pattern for the industry. So I'm proud that even since Bank 2.0 in 2010, my first book that I launched, I'm proud of the fact that not only have I been generally right in terms of my predictions, on what's going to happen in the space, but I've actually had the opportunity to participate. One prediction I got wrong in Bank 2.0. I said by 2016, mobile payments would overtake plastic card payments. Unfortunately, I was wrong about that. It was 2017 when that happened as a result of the Chinese mobile payments infrastructure around Alipay and Tencent WeChat Pay. In 2017, mobile payments surpassed plastic card payments in the world for the first time. But you know what? When I made that prediction in 2010 that mobile wallets were going to overtake plastic card payments by 2016, people thought I was crazy. And yet I was only a year off. So I'm quite proud of that as a track record. As a futurist, it's very important you get good at predicting the future, right? So, But I really I thank you for the opportunity, Eddie, and please stay tuned, because the things we've talked about today, they're going to be out in my new book, which is called The Rise of Techno-Socialism. It's going to come out early next year. Arnold Schwarzenegger has done the foreword for us. Wow. We've got contributions from Jack Ma and other really notable players in the space. So I definitely would encourage your listeners to watch out for that in the new year.
Lovely. Thank you. Very sincerely appreciate you being part of Change and Possible podcast and sharing your insight. I feel honored to be, talking to you and getting the insights from you. And to my listeners, if you like what you see in here, please press the subscribe button. Like always, I'm going to leave behind all the details of my guests down below so you can reach out, because this is about building a community. And until next time, see you guys. Bye-bye. Thank you. Thank you, Brett. Really appreciate it.